Welcome to the Fractional Podcast. I'm your host, Stella Hahn, and today we've got John Ross, who is leading one of the most unique clubs that we've ever seen on the Fractional platform. John, welcome on and tell us, what is the Premium Circle Club? What are you doing over here?
Yeah, Stella, thank you very much for having me on. And I could not be more excited about this club, mostly because I'll give you a little insight of what it does. But this club really came about when I shared what I was doing with a friend of mine. And he says, listen, man, I would love to do that. I can't deal with Mondays and Fridays, and I'm not quite sure if I would trust myself to do what you're doing. But what if I give you my login to my E-Trade account? You do it, and then just send me an invoice. And I go, well, that's because that would be illegal for me to do that. But I do have an idea. I met a young lady at one point at one of these conferences I was at, and let me reach out to them and find out if we could do a club that I could do this for you. We share in the revenue, and we all win. And a lot of people on your podcast, maybe they haven't, but a lot of people have heard of something called the wheel strategy with options trading. And if you play in the market, you've probably heard about options or you've thought about options. And some people have heard horror stories of options. And the reason I never did options before was because all the horror stories you hear is somebody do an options game, next thing they're underwater and they owe a bunch of money to some brokerage account. And, you can go with your imagination as to how far it can go, but everywhere from it craters their entire family to the worst case scenarios on it. So what this wheel strategy is instead of buying the market, so instead of buying NVIDIA, I buy or sell a put on NVIDIA with my own cash. So I don't borrow margin. I'm not saying, hey, I'll borrow margin on this thing, and then if it works out, it works out. If it doesn't, now I owe you money. I take my money. So let's say NVIDIA is $200 a share. I've now locked up $20,000 in capital because each share or each contract is 100 shares in NVIDIA. But I say it's worth 200. If it gets to 190, well, then I'm willing to buy the stock. Like the insurance company. I'm the insurance company in this case. I'll agree if it drops to 190. Now, I do it on Monday. And it expires on Friday. So I'm not trying to predict what NVIDIA is going to do the next month, next year, 2 years, 10. I'm only trying to figure out what it might do this week. And my goal is that by Friday, the stock's worth 199, 191, I don't care, above 190, and it goes away. And for that contract, I collected $200. And if that stock happens to drop to 189, on Friday, I roll that exact contract to the next Friday, and I collect probably $400 because now it's very close to the strike price. Now, let's say the worst case scenario happens and the strike price drops to 170. And I now am forced to purchase the stock for whatever reason, which can happen to anybody, happens at any time. It's NVIDIA. I'll take NVIDIA all day long, no problem, right? So I get NVIDIA at 175, but I had to pay 190 for it. And now I turn around and I sell what's called a cash secured covered call. I own the stock and I'm going to say, hey, if it reaches 190, then I'll sell it to you. And for that, you agree to pay me $200. And you pay me, somebody pays me $200. And if that Friday, the stock gets to $191, the stock goes away, I get my $19,000 in capital back. But along the way, I've made $2,000, $4,000, $6,000, $8,000, whatever the case may be, on that portfolio. And we do this over and over and over, always Monday, always shooting for it to expire on Friday, but we're doing it with good quality companies. We're not trying to go after fly-by-nights. You can go, the riskier the company, the bigger the premium, but the riskier the company, the risk of us actually getting into one like a BlackBerry that just disappears. We don't want that. We want safe asset classes with businesses that we would have invested in all the time. I actually started the very first two trades I did were Delta Airlines and Norwegian Cruise Line. I don't know you, but I'm pretty sure Delta Airlines and Norwegian Cruise Line are going to be here 20 years from now. So I wasn't worried about buying those companies. Now, since then, I've done it with Google, NVIDIA, Apple. We've gotten into some of the USO is a oil company. When it starts to come back down, it will become popular. And what makes this whole strategy work is you think of NVIDIA as a good example, where all of the big seven, the Mag 7, have gone way up. And for some reason, NVIDIA has not. but yet NVIDIA is the one leading the charge. So right now, all the analysts would tell you that NVIDIA is a little bit beat down compared to the others. So if there is a crash coming, it's probably not coming on NVIDIA, and it's probably going to go up, right? So we look for that moment where something is oversold and it's beaten down a little bit for whatever reason, right? Think of Norwegian Cruise Line was a great example, and Delta. They were hit by the Iran war. Oil is what hit them. Nothing's wrong with those companies. They were going to pay more money for gas, so everybody started exiting them. So we're trying to buy those companies that what you might consider a dip. But again, we're not buying them. We're getting down to the dip, and then we're going just below it. And our target is 1% per week on each of those contracts. Not 5, not 10, not 20, not 2, 1. We're just after 1. And so far in this entire year, the lowest performing week I've had is 0.43, and the highest is 0.67 or 0.167. So sometimes we're going to be over 1, sometimes we're going to be under 1. The target for us for the club purposes, because we want to be prepared if there is some kind of a market pullback. We do make more money on puts than we do on the call itself. So if we have to own the stock, we generally won't make as much because we're trying to be safer on those because we want to get rid of them, but we don't want to push them out for months and months and months. So in general, we want to prepare for it. So we're targeting a 0.75 return to the investors, which would get a net 0.3 or 30% net return to the investor. Of course, if we perform the way we should perform, the way my portfolio itself is performing, it's 1.01% since I opened the 2 accounts that only do options. My entire portfolio is 1.22% per week.
I love that.
Average. If we can hit that, now we're into the 40s, 50s percent returns for people, and that is where someone really goes, okay, we got to play a different game. And this isn't, again, we're not predicting the market. We're micro compounding. Every week, chipping away at a little bit and a little bit and a little bit, collecting premium along the way, and we're going to return that premium every month to investors like clockwork.
Clockwork. Yep. That I love the word micro compounding that you use in clockwork, because just listening to you describe all of that, I'm like, you've got this very scalable system just completely locked in, and that's what you're just gonna keep repeating every single day on this weekly basis, and that is incredibly powerful. And John, I want to dig into a little bit of something that you said. You said earlier, well, of course it's NVIDIA, right? Who wouldn't want to? And I know your selection criteria is really around buying something where you would want to own the company, and you mentioned Delta, Google, and getting at the dip. What's the opposite of that, where it's something that you don't want to own and it's not just being up temporarily? What are some counter examples?
Yeah, no, so there are counter examples that wouldn't end up in this fund. I might do it in my own because I actually like the stocks, but if you think of AI, right, are we on the cusp of an AI bubble or not? You could talk to everybody. You're going to get a different answer from everybody that the whole market's going to collapse. But everybody would agree that those AI companies' stocks are scaling at a much higher clip than everyone else when you start looking at earnings per share. So you get to a company like Irene or Cypher Mining. Those are in the crypto space. They're in the AI world, but they're AI infrastructure. Those are 2 companies that I actually believe in, but they would probably not make it into this fund unless it was a voting thing where everyone said we want to go in. They pay very high premiums, but when we're talking volatility, these stocks could be worth $40 or $50, and tomorrow they're worth 10. And you've got to dig your way out of it. So they're good companies in the AI model, but they're not Delta Airlines. They're not NVIDIA. They're not Meta. They're not Microsoft. And if you want to try to get out of those, they're not United Health Group. They're not companies that have been around for a long time that have a good, solid history of performance overall, although they could be one day good companies. So the club may vote to put those in, but I wouldn't immediately say, hey, guys, here's the list of all the stocks that we have, and those stocks make the list. Because if there is an AI bubble, one would argue that one of those stocks is probably going to vanish.
Right.
Overnight. And there's a laundry list of them that are out there. Those are some that I think some people may know in there. But even those good companies that have been around since AI infrastructure became a big thing they're not on my current list of what I would put in this fund of something. Just think of Levi Strauss or Gap, Estee Lauder, like companies that have been around for a long time. Those don't pay huge premiums because they're very stable asset classes, but they're not going to go away overnight. And if we get into a spot where we feel like some things change, I'll go back to the first time I let an investment advisor go was when I owned BP Oil. So BP Oil at the time we owned stocks is when I actually took over my own stuff because I thought this is crazy. BP Oil has the biggest oil spill in U.S. history. And 6 months later, the advisor goes, I think we should sell the stock. 6 months later, that was the biggest producing or performing dividend stock we owned. And we now had lost most of everything we owned. And I thought I could have done that with an app on my phone in 10 seconds, sold that stock. But we weren't thinking about it because it wasn't my job. Right? So if something like that were to happen, BP Oil is in our portfolio, and there's a huge oil spill, well, then the club gets together and says, hey, there's fundamentally something has changed with this company, but it wasn't because it wasn't a bad company. It wasn't because of an AI bubble. It was something that probably nobody could have controlled. And now we're going to decide, do we want to exit that stock at a loss or not? But very little opportunity for us to lose everything on a stock. And then we have parameters in there, Stella, rules, so to speak. As I was writing it, was something like the dashboard, the lights, the steering wheel, like something to hold the club leaders accountable to making sure that we are playing in the quality companies, but we're also protecting against something like that, a big crash, which is that we're not going to try to hold more than 25% in a sector. And we're not going to try to hold more than 10 or 12% in any one company. So if you look back through, and I've got this for our investors, is if you look back through history of 2020, 2008, 2020, or 2000, 2008, and 2020 were big market corrections, or if you could call them even crashes. And some of them took, a year, 2 years, 3 years to get out of. But none of those crashes produced the same level of crash for everybody, right? Think of COVID, right? If you owned a stock in Zoom did not hurt in COVID, right?
Right.
Oil stocks did not hurt in COVID. But a lot of companies, did. So we want to make sure that we're diversified in there with a good quality company so that, if we were to get, we'll call it put the stock and forced to purchase it, nobody's freaking out. We're like, it's fine. That company's going to go up. We're going to play the other side of covered calls. We're going to make money along the way, which is why it's such an exciting program, is that no matter what happens in the market, whether we own the stock or we don't own the stock, we have a way to make money. And somebody told me, and it's like, sounds a little bit like gambling. I say, it might be. If you play in the stock market, you're definitely gambling on some level. Most investors would not tell you it's gambling. If you talk to a poker player, though, that person would not tell you that they're gambling. A professional poker player would say they have an edge on it. And I turn that around and say, if you were a professional blackjack player, I'm the dealer. I'm not buying anything. I'm selling a put or a call, saying, if this happens, you pay me. And if this happens, then I'll do that, right? And you could turn in the other. I came out of the last 5 years I was working for Aflac Insurance. The insurance company always wins. In this case, we're selling insurance on the stock. If it does this, I'll take it. I'll take it off your hands. And we're probably 70% of the time, it expires worthless. Yeah. I keep the money and it moves on and we go put it on a different stock. Every now and again, I get assigned something. I got assigned NVIDIA at 190. So that's why I gave you the example. That stock shot up last week to 218 and I sold the stock and resold the put on it at 175. Like this is how it works. So not only did it eclipse my 190, it went way up to 218. And then I sold it. So we were making money that way. And that money, that belongs to the club. There's no share and revenue share to the leaders for that. That's pure profit or revenue to the club itself, because that's tied to the actual positions, not the premium.
Yeah, that's fantastic. And it's not gambling if you've calculated all the risk and you got the plan A, B, C, D, E, F, G all lined up, right? So exactly. I think that's a really great way to put it. And John, you wait for two signals, the Bollinger Bands and RSI under 50. For someone that is, not super experienced in the trading world, can you explain just in plain English, what does that mean in terms of what you're looking for?
Yeah, because it was foreign to me at first when I saw it too. And I said, I have a tool that I use that helps us identify these markers. But If you think of a Bollinger Band as really nothing more than if you watch the stock price going up and down, and you take where the highs and the lows and you track it as it goes up and down. The Bollinger Bands are the call it 6 month. You could even do a year. You might even do 3 months. If you took that stock chart and divided it into three categories: the high third, the middle third, and the bottom third. We're trying to get in the bottom third of that company, right? So again, example, Intel. You would not play Intel right now. You would not play any of the oil stocks right now because they're all way high on their 6 month or 1 year chart. So on the Bollinger Band side, we're trying to find a stock that is on the lower third of where it's historically been over the last 6 months, and sometimes I'll even go a year or two, right? Something that's been a little bit pushed down for whatever reason, like a war, right? RSI describes the selling and the buying and the selling that is happening in the stock. Something that is overbought is jumping up. So if you think of a line at 50%, so an RSI category runs from 1 to 100. At 50%, it's right in the middle, right? It's not oversold, it's not overbought. It's, sitting flat in the middle. If it jumps up to 60, 70, 80, then the stock price is running up, which essentially means at some point it's probably going to run back down, right? As people take profits and they come back down. So we're looking for a stock on the lower third of the Bollinger Bands and below the 50%, which means it's oversold. More people are selling it than are buying it. So we're going in and saying, all right, here's a spot, lower third of the Bollinger Bands. It's over or undersold right now. And I'm going in at that point, and I'm going to enter my trade below, far enough below that captures me that 1% of premium. So again, on a stock that's worth $100, I'm looking for $100 in premium. That's it.
That makes sense. And John, one of the things that, really resonates with me and makes me personally excited about getting into the club is, you mentioned you see a world where, people come out of the club and they've learned so much where maybe they, are actually empowered enough with now new knowledge to do this on their own, right? What are some of the pieces that club members get to actively participate on? How are you designing the experience of the club?
Yeah, I think that's great because it's probably the most important part, Stella. If someone actually could do it, you should do it. You don't need me, you don't need my tools, you don't need anything. If you think you can do it, you should do it. Because it's a heck of a lot of fun if you really understand, you get in and you really want to take the stress out of it. It's not supposed to be stressful, but when someone comes into the club, it's like if you joined a fund and we were doing it, we would just do it. You would get reports, say how we did, how much money you made, and it's great. But if you come into the club, we're going to open up the hood, the doors, pull everything out and say, now here's exactly what we're doing. So no one is coming into the club that hasn't had a chance to meet with me and understand the strategy. Why do we do what we do, when we do it, what types of companies are in there? Because we don't want anybody coming with this confusion that we're going to change our strategy because we know it works, right? You're going to come into the club. We want you to fully understand when someone joins the club, they're joining the strategy. When what they get out of that is we want their help. We want them to see what we're doing and why we're doing it and have a say in the companies we're doing it with. I want someone to say, hey, John, how did that weird little AI company end up on this list? I never heard of them. I looked them up. They started yesterday. Or, hey, how come you don't have Gap on your list? Or a good example, Chewy. Why isn't Chewy on your list, John? I don't know why. It's a good company. It's been around a long time. I got dogs and cats and they love it. And my answer to them would be, well, because we tried Chewy with my money and getting out of it sucks. It doesn't work. We don't get paid anything. So it doesn't really work for us. Good company doesn't work in our system. So we're going to share the list of the companies. They're going to vote on those companies that we're going to trade over the course of the next month. And they don't really change. I have four accounts that do this. And inside of those 4 accounts is primarily the same group of stocks because they work and they're good companies. And I'm not nervous about any of them. And if I own them, that's okay. I'll take them. And then each week we will send out here's how we did last week. Here's the trades we placed, or here's the puts we sold this week. Here's the calls we sold this week. And they can watch the system itself running, because I think a beautiful thing coming out of this would be somebody saying, hey, I got it. I can do this. I have the time, or I have the resources, or I'm going to semi-retire, and I'm going to do this because I can work on Monday and I can follow up on Thursday, and I can definitely work a little bit on Friday. But if I don't have to work on Tuesday, Wednesday, or Thursday morning, I'm in. And that would be awesome to see people do it, right? Clubs only have 100 people in it. So if 10,000 people come in, some people have to grow up and come out of the club, and that would be wonderful
Yeah,
to see
they
that.
gotta graduate. I'm definitely excited for the people that will graduate, and I mean, I'm also excited for the people that will stick around. I feel like personally for me, even after I start getting more of a hang for it, I would still love to be in the club and just be a part of the group and have it be a collaborative experience where we can, bounce ideas off of each other. I think that would be a lot of fun as well. And, John, earlier you mentioned, right, you were talking to a friend about this and he told you right away, there's another buddy that's coming in and that wants to do 50 grand, right?
Yeah.
Why do you feel like people are so passionate about jumping in, working with you? What is, the special sauce that you're bringing to the table that, makes people want to just double down?
I think, these are people that have known me, for quite a while. They haven't done anything with me. So the guy that's coming in for the 50 grand, I've only met him a handful of times, but the times he has met me, he's seen me in an energetic mode, right? I've been in sales for a long time, so I do get fired up, but I get a lot more fired up if it's something that I'm building. And the most exciting part about this is I have done a ton of research, and I've had people tell me this is crap. This doesn't work. You can do this right now. And every time I get into the weeds, I'm like, okay, you don't have to do it if it's crap. And no, you can't do it anywhere. There's not a single place that I can find today that does this strategy with this level of return. You can look it up right now. There's a stock called Wheel that's out there right now that generates a 13 to 14% return. I will do that in a quarter. Right? And then I had someone say, you could do this, John. You could go to BlackRock. They would do it. And yeah, they would, but I don't have enough money to go there. And they're not going to take me as a client anyway, right? Those types of clients that are out there, or those types of companies that are out there, there are big institutional investors that a normal person like you or I are not going to get into. And the stuff we can get into is not producing the revenue it should, right? If I can produce 30%, and I'm telling you 30% still, that's if I suck at it. And these guys are producing on a professional grade 13, 14%. What are their fees? They must be enormous. Or they're playing so safe with crazy stocks, it's not even worth putting it in. You might as well buy the stock, right? But it's a heck of a lot of fun. Almost like flipping Wall Street on its head.
Yeah.
Right. And I'm a private equity guy, right? My day job is doing hotels and apartment buildings and, really safe quality asset classes that produce 15 to 25%. So if you tell me that I'm going to run this crazy thing on the stock market and my best bet is 12, 13, 14%, I'm like, I'd rather put it in a hotel. At least I know what I'm going to get. And at the end of the day, if the market crashes, I still own a hotel.
Right.
Right. So in this world, we're like, let's do institutional inspired investing, but let's make sure that the money ends up in the hands who it belongs to, which is the investor, right? Our split percentage on it is only on the premium. If we don't win, we don't get paid anything. You have to get a huge return, and you should get the bulk of it's your money. That's what I think makes the club better than something I've ever seen out there. There are things that are similar, but nothing like this one, and nothing where you can pull all your friends together or people that you meet that share the same common goal as, like, maybe you don't even want to learn it. You just kind of want to watch it and have fun and laugh. Like, that's great. We get it big enough. We'll do some events and get people, get them together and gather, because everybody does something different. And every person who comes in a club is going to come from a different environment. And networking is a huge part of who all of us are. So the people that are coming this are going to be people who have jobs, who don't have time to do the trading, or just don't trust themselves, or really just don't want to. I have a buddy that's going to put, I think 65 grand is what he said he's going to put out of an IRA. And IRAs don't pay taxes, right? So not yet. So that thing can generate all kinds of revenue. It's a great place to do it. And he goes, I probably could do it. I just don't want to. I don't want it. That's why I would do a financial advisor, but I'll just give it to you and you do it.
Yeah.
And can I do auto voting? You can vote. And I go, no, you have to actually vote. You got to show up to the call and you got to vote. And he goes, okay, well, I'll do it. I'll do that then. But I won't even know how to interject and tell you what to do. I don't really care. So we have everything from someone who wants to really learn to somebody who's looking at it and saying, I know you, and that return sounds like, yeah, that sounds like something I'd want to do. And what I'm hoping besides people graduating out, what I believe is going to happen is when everyone sees what I see, they're all going to come screaming saying, "How do we put more money in? I tried 25,000. Here's 200." Right?
Yeah.
That's what I think is going to happen. I think there's going to be a group that's going to come in and say, "Well, I like the distributions, John. That's great. I like the distribution, but I'm using an IRA. Now I have to figure out what to do with it." And now we open a second club up for IRAs that just compounds. It produces no distributions, and it just grows. And for those of if anybody who's out there listening right now wants to know what 1% does, take 100 grand, put 1% per year compounding for the next 10 years, and see what chat tells you it is.
Yeah.
It is
You're gonna
an
get a very big
enormous,
snowball for
it is
sure.
an enormous amount of money. And if you have $1 million, put that in there and see what that looks like. Because part of it is just wealth building and creation and thinking like, what can this really be? Which is probably the best part of what makes people realize you can't knee jerk reaction this thing. We're only after 1% per week. And I don't care what the market does. It can go up, it can go down, it can go sideways. If it goes way up, we get our cash freed up a lot faster. If it goes way down, it's probably a little bit more stressful, but we can still play. We can still sell cash secured calls, covered calls, and we still making revenue. If it goes sideways, it's like a heyday. That's when we make the most amount of money, because as the money stays on the side, that's when the premiums become the biggest. So it's such a
Absolutely.
unique, interesting environment where you just don't care. Actually, it's kind of laughable, right? We stop things on Fridays, and people are always like, "Well, why do you stop them on Fridays, John? Why don't you just do them up for a month? Then you don't have to work so hard." And I go, "Yeah, but think about what happens on Friday. Like last weekend on Friday closes in between that and Monday, right? Actually closed on Thursday because it was the 4th of July. So between Thursday and Monday, I think we were at war. We weren't at war. The ceasefire's on. It's back off. Now we're at war. We're not at war. Now we're bombing. They're bombing us. I mean, it was like all this happened over the weekend, and the market doesn't know what to do. Right. So Monday rolls around, and I went for a workout in the morning. I let things kind of settle down. I did a bunch of regular work, and at about 11 o'clock, I go, all right, let's go see what the market's doing now. And by then, I had kind of settled down. I went and put all my trades in, and right now, if everything moves the way it moves tomorrow, I'll have very little to do. A lot of stuff I did is going to free back up again because the market lost its mind on Monday. By 11 o'clock, it started to wake back up again. Then yesterday it lost its mind again, and then today it's starting to come back out of it again. So we'll see what happens tomorrow, but it doesn't really matter because if I own the stock, I'm going to sell calls. If I don't own the stock, I'm going to sell puts. Either way, I'm selling something that gets the revenue coming into the club.
Yeah, we've got every version covered. And
Right.
John, I'm so curious on how you think about this because we had originally met, through the real estate, the acquisitions world, right? And this is something that is, on the other side of the spectrum, right?
Yeah.
In terms of who you think should be in the club, what do you think their financial goals are? What are they trying to achieve in life, and how is that different from people that are investing in the traditional asset, or maybe it's similar? How would you describe the people that need to get into this club?
Yeah, I mean, it could be a bit of all of it, but I would tell you that somebody who is in wealth preservation mode probably isn't a fit for this company. If your whole goal is to take whatever amount of money you had, put it in some safe asset class that you're not going to lose any money, it's very liquid, you can get to it. So think of somebody who's in their 70s and 80s, and right now I'm just trying to live off what I've done. I've done a nice job of investing. It's probably not a great investor for us, although those people can be very curious. And it's not a long club. It's 1 to 3 years, and I can explain why it's 1 to 3 years in a minute. But it really, if somebody who's looking to build wealth, I would not tell someone put all of your money in this club. Do a taste test. Do 20, 25 is fine. 50 will really show what it is, because in 50 we should return 20 in the first year, somewhere around that. Those are nice checks coming in. If you do that, even 100, the example I have printed out for people is at 100. Put something there. But if your whole goal is wealth creation, this is a tool, even if it's just a small amount of your total portfolio, is a tool that is going to make people go, wow. Now that is a real return. And what I believe people should do is all the things you mentioned, real estate. I said hotels, multifamily, those are great asset classes that every family office I've ever met puts most of their money in in real estate. It is probably one of the best tools that's used and leveraged out there, as well as funds, income funds and credit funds. They can be very lucrative because you put money aside over there and it just grows, right? If you go into a multifamily asset class, a new construction build, that's an 8 to 10 year hold. You don't worry about what's going on. You don't care. I want a 16, 18, 20% return in 10 years. I'm not worried about it. This money is closer, but when someone sees this and it grows the way that it grows and it starts producing what it does, Stella, is gives them more capital to deploy in those real estate deals. Put the capital here, let it grow, and then start diversifying it into these other asset classes that grow. And if it does, when I know what it's doing for me, for you, then maybe you don't want to, but you should. Any investor should. I explain to my kids all the time, like, you think of wealth creations like a house, right? You have a job and you're holding the roof. And now your job is to start putting walls up so you don't have to hold the roof, which means when the tornado comes, it doesn't take you out and the roof is gone, right? So the very first one is your retirement bucket. You should always be focused on putting money into your retirement because that's the best micro compounding out there. The next one is the front of the house. What happens when the tires blow on your car? You have to go to work. So are you going to put it on a credit card and cradle yourself for the next 5 years? Or do you have $2,000 sitting somewhere that you can use to offset those things? And then you start talking about building walls, which is real estate and other investment classes in there. And all I'm saying is this is literally the rocket ship or the fuel that increases the strength of all of those walls because it grows so rapidly and so fast. I would tell you that I believe the perfect investor, the two perfect investors for us are somebody who's in their 30s to 50s who really wants to grow wealth, or somebody who's exited a role and has a 401k sitting someplace that is managed by who knows who, doing God knows what. Put that thing in a self-directed IRA and do this strategy with it. Roll it into an E-Trade, a Charles Schwab's Thinkorswim, a interactive broker, a Robinhood account. I don't care. Put it into an IRA and follow this strategy, and it will literally grow at 67% if you follow the framework the way we're doing it. And if you don't want to do it, stick it in the club because it'll take an IRA too. Better yet, do it with a Roth where you never pay taxes on it and let micro compounding really take off for you. But anybody who's got 25,000 can do this club and more for it. So I don't know that there is a, so to speak, perfect investor, because I wouldn't tell somebody they can't do it. Anybody with the capital can do it. And the only reason it's 25 is we're trying to keep it, somewhat to a smaller size so we can get really good feedback from people, genuinely build it out the right way. And we don't want to worry about somebody saying, well, my tires just blew and now I got to get the money on, and we can't do it. Right. Yeah. The club is somewhat locked. So I mentioned the 1 to 3 year thing. In less than a year, everyone's going to see what's happening. And they're either going to say, build a fund or add more clubs. Right. And we have to have the ability to pivot on it. I also don't want people to think the money's locked up forever. If in 1 year, everyone's like, it was fine, but I want to get out. We want the ability to get out. And the only reason it's 3 is because, well, what if the end of 12 months, everyone's like, we want to get out and the market crashes? We have to have time to recover. We're going to make money along the way, but we have to have time to recover on it. And it could get to 3 years and everyone's like, let's keep going. Right. And if Fractional can figure out how to help us make it so we can deal with the NAV at the end of the year where people can put more money in or take money out, then the club could exist forever.
Yeah. Open club.
Nobody wants the capital lock forever.
Definitely on the roadmap. But I definitely hear you there. Like, I think it's going to be just such an exciting process and journey just to live and go through it live and in real time. Like, that's honestly something that I'm super excited about. And have the flexibility, right? Like, I think that goes back to just your philosophy of operating as a whole is you've got all these different paths that are set in place where no matter what scenario we encounter, we have, a way to work through that and find a good exit or figure out the next move. Yeah. John, any final words for people that are listening?
I think we're so excited to get this thing launched off. And again, I wouldn't even be here if my own friends didn't say, well, what if you do it for me? I just don't have time. I have the time and I want to do it. But we're going to share everything with everybody, including the list of stocks that we're doing it with. So my also hope is that some people will say, all right, well, here's $50,000 and I'm going to take an account of Robinhood for 25,000, and I'm going to do what you're doing over here. And I'm going to try, and we're going to give you all, you're going to have all the stocks because you're going to vote on them. So you're going to see those kind of things. So if this is something that you're interested in doing, there's all kinds of different ways you can pull capital from different places. You and I actually met at a money tank. So that's one place you could go get it, self-directed IRAs or just straight cash in it. I'm putting my money in it. My partner Greg is putting his money in it. So our money will be in the club along with everybody else. And we're very excited to see what this does, Stella. And I hope the fractional group really pays attention because I think it's going to explode.
Yep. I'm excited as well. I'm going to be on the inside. So for anyone that's listening, if this is something that you're feeling really pumped about, I'm saying really this is truly something that is so unique. We've never seen it on Fractional before. So John, thank you for being on the platform. Thank you for founding this investment club that you're doing. And we'll see everyone on the inside. Thanks for tuning in.
Thanks, Stella.
Awesome.